and then 94 above that. So all right, quickly coming down here to the 74 area. And you're working the 74 area here. And then maybe you could have made an adjustment to the downside based on the fact that we stopped at 77. If you did, you got in a little bit better. Again, it's always making those adjustments, and our levels are not etched in stone, and you have to look at the price action prior to the area to determine what your situation is going to be as far as your entry points, and maybe the number of contracts that you trade, how you get into them, etc. Stuff like that. All that depends on your risk tolerance. And we'll work in the 74 area right now. Again, whatever the situation is, make sure you keep your stops in place. All right, we'll continue to downtick here. Next support level is down at the 65 area. The market under pressure here with the FOMC meeting coming out starting today and ending tomorrow. All right, again, market under a little bit of pressure here, trying to figure out what it wants to do. Again, the backdrop is the situation of what the Fed is going to do with their two-day meeting, which starts today. Bonds here continue to just get pummeled here. Big inversion between the twos and the tens continues to indicate definitely going to raise rates. Question is there going to be some kind of soft landing or not? Doesn't look like, for the time being, doesn't look like going to be any soft landing, but who knows? No numbers coming out today. Okay, we continue to downtick, looking down here at the 65 area. Okay, market kind of just hanging here at a lows, got down to 67 and change there. So just kind of continues to be under a lot of pressure here as the bond market here continues to just rates keep going up and basically forcing the hand of the Fed, at least. Well, that's what they're saying anyway. So we're going to have a big increase in the question is, or what's going to be next month or next meeting? I don't know if it's next month or not. It could be November. All right, kind of popping up here a little bit. We've got a resistance around their pivot there at 85 right now. All right, market trying to bounce up there, a little bit of resistance around the pivot area. Uncomfortably high to unfriendly to stocks. Well, I mean, the last time we had a rally was due to the fact that he was gentler in his commentary towards, you know, towards the towards raising rates. And then when he gave his written speech, he just basically said, "This is way too high. We're going to keep raising till we get it under control." Basically, just saying, "I'm going to raise, and hell with everybody." So that's where we're at, and this is the hell with everybody that's under consideration here. He basically says, "All right, things are teensy weensy looking a little bit better. The market will rally, but until then, you're right. I mean, it's just they're going to keep raising rates at a high level quickly, and that fears of a recession." So stock market, it's unfriendly to the stock market only because of the recession factor. Yeah, he did. That was in his statement, though. He never said that, verbally, and that's why every time he puts a statement out, which he doesn't have to answer to reporters, when he answers to reporters, he kind of makes things a little bit easier or sound better. And that's why we had that last rally before that statement at Jackson Hole. So we'll see what happens. And it doesn't look good anyway. Bond market is basically telling you what's going to happen. So we'll come back down here to the lows. We're looking at the 65 area here. Remember, we got down to 67 and change. So it's not today. It's going to be tomorrow. Today is the first day of the meeting, and tomorrow is the next. And so we'll see what how they're going to, what they're going to do. We'll see what happens. What the market is anticipating, not good news. Oh, the bonds are saying we're screwed. Bonds are pretty much dead in the water here. I mean, you got, 2 years at almost 4%, and 3 year it's 3.5. So, and that's inverted, by the way. It should not be that way. So we got problems. The bond market's saying we have problems. And the market continues to downtick here. Coming down here to the 65 area. work in the 65 area here a little bit. All right, we got right up there to 68 and change up there. If you get in at 66, again, it's just scalping the level. Again, if you did have, well, we did get down to 65.50. So as far as we're concerned, the level kind of worked. And we got a nice little rotation here against it. So be a little bit careful there underneath. If you have 65 straight up, obviously the level did work. So I would be very careful there. If you did not get filled. All right, nice little rotation there against the 55, 65 area that we have. All right, market did go down to 65 area there that we had and rotated back up. All right, nice rotation there against the 65 area. Resistance would be around our pivot area there for at least for the time being. All right, again, market popped back up to about 75 there and came off. Again, the 65 works, so we're really looking at the 54 areas, our next support level. Yeah, we're coming back down here to the lows again. Remember, 65 already got triggered, so it'd be very risky if you're going to take any part of it right now. More looking at the 54 area next. All right, they did trickle right down to 60, 475 there and pop back up again. They just had to be, if you were gonna take the level there, it was a little very risky. But obviously, sometimes it works, sometimes it doesn't. But again, we just try to explain the risk to everybody, and then it's up to you as a trader to make that determination if you're going to take the trade or not. All right, we seem to have gotten to this little area here on the bottom to kind of just hang. See what it wants to do. Again, we did go up against our 65 area there, and whether you got in earlier or maybe you got in on a second rotation back to it, but either way, the 65 worked. Obviously, we got run over on the 74 just a little bit and never got really a good rotation back up there. Only thing, if you did adjust your entry point there a little bit because of where we ended up prior to that, you could have done okay with that. And now we're just kind of hanging here. Again, there is different risk tolerances for everybody, so it's definitely up to you as a trader whether you took the 65 on their second rotation down or not. But we try to explain the risk, and maybe some of you did, maybe some of you didn't. Maybe you adjusted your entry points, traded less contracts. Up to you as a trader to make those determinations. Now we're just kind of staying in this range here at 75 on the top side, 65 on the bottom side. Our resistance would still right now be at 85, our pivot. Let's see what it wants to do up there if it gets back up there. Patience is important here. As the market's kind of weighing in on the FOMC meeting, which starts today and ends tomorrow, and what they're going to do, moreover, what their statement is going to imply. As a trader, what are some of the ways to identify whether prices will go up or down? Well, the reality of it is that we don't try to determine a direction of the market. We let kind of the market give us some indications as far as the technical analysis that we do, whether a market is going to get
no, just a misstyle.
bullish or not. Hang on a second. Can you turn? Okay. Whether the market's going to get bullish or not. So we have support areas, we have resistance areas. We trade around those areas. If you enter with proper, if you enter with multiple contracts and you like an area and you keep your stop in place, then you could maybe provide an area longer.
You sign the papers?
More than our scalping opportunities, which is right now 2 to 3 points. Or so. Other times we're looking for the market to give us a technical reason why to get long or short, or why we get bullish or not. But for the most part, we're not trying to determine which direction the markets are going, only because if we have that determination, or if we feel we know which way the market's going and the market doesn't go the way what we think is going to go, then we get ourselves into a little bit of a rut. So instead of trying to get direction or feel any kind of direction, we try to stay neutral and try to just trade off of areas that we feel the market will give us an opportunity to scalp the market. And like I said, if you're trading multiple contracts, you can obviously hold on to stuff and take more than 2 or 3 points, depending on the volatility for any given day. Right now, it's 2 or 3 points. That could change. We could easily go 5, 6, 7 points. We've been as far as 9, 10 points when the markets were really nuts at the beginning of COVID. So, but again, we're not trying to figure out direction only because we're not smart enough to, and at any moment, market direction can change because of different factors. One is people saying something, technical reasons, oversold, overbought. So we're just trying to find areas that we can scalp the market and kind of be patient and wait for those opportunities to get triggered. All right. We're just kind of, again, hanging here on the lows, trying to, again, we said 75 to 65. You could definitely trade the range game here. It's obviously risky, but keep your stops in place if you're going to trade the range game. Markets do get, give you opportunities. Again, it all depends on what you're looking for as far as a trader is concerned, or what your goals are, and how you see the market, perceive the market. We kind of explain everything in our education course, the methodology that we use, things to look for, how you can manage some of these trades if you are a little bit more aggressive and want to trade a little bit more. All of these are options that you have as an independent trader. We try to explain the different concepts and ideas that are out there, and then it's up to you to see which ones you want to use and implement for your risk tolerance, so you can manage your own risk tolerance and manage your own trades that you see. Not every trade is for everyone. We explain a lot of trades, show you a lot of trades, and it's up to you as a trader to determine which ones work for you and which ones you can recognize as when they present themselves in the market. Recognition of the trade is one aspect, and execution is the second. I work with you on both of those in our education course to help you adjust your go forward with your trading and become a little bit profitable. Tough game, no matter how you slice it. As the market continues to downtick here, we're looking, the next support level we have is down at the 54 area. Well, MACDs are great, except for one thing. They're laggers. Most indicators are laggers. When we are trading, we are looking for opportunities to get into a level or an area that we believe the market will give us a inflection. It's an inflection point for us to trade off of for the various reasons that we have. Consequently, if you're going to wait for a MACD to turn over or to make a, it's already too late. You've basically just given up some opportunities for a good entry point. So MACD's reassurances, again, if you're looking for longer term areas, like longer term trades to get into, where your stops are a lot wider and your goals are a lot bigger. If you're looking for 20 or 30 point moves, okay, maybe you can use those, but where you enter and how you get in is what we're concerned about. MACDs or any other indicator, by the way, is always going to be a lagger. So we're trying to obviously get ahead of that situation just a little bit by finding areas that we believe the market will turn on to give us a scalping opportunity, and then consequently to get in at an appropriate level and get in at an area where you like and you have multiple reasons to get into it, and then maybe multiple contracts, you can scale out of them and achieve a little bit more than whatever your scalping numbers are. Right now, like I said, we're 2 or 3 points, but it could be 4 or 5. You can get 10 points out of a trade. Again, you have to determine how you trade and the methodology that you're going to use to trade, and then stick to it. No matter if it is using MACDs and if it is using indicators, that's great. But you need to have a good grip as to how you're going to use it and when you're going to use it, and stick to it. As long as you can get that recognition of finding those areas that gets you into the trade, and then you can manage those trades accordingly. So again, we kind of steer away from them only because we think that they're laggers, and we are constantly, trading in and out of the markets instead of trying to hit home runs with the trades that we're looking for. So we're not trying to get 10, 20, 30 points out of a trade. We're trying to get 2, 3, 4 points out of a trade and then look for a next opportunity. We also focus more on the morning hours to give us those opportunities. And, if we can average maybe 4 to 5 to 6 trades a day, then we'd be happy with those opportunities and then wait for the next day. We focus on the morning hours to give us those opportunities because we feel that the dynamics in the morning play out better to the objectives and to the trades that we're looking for versus the whole day trading. You can get a little bit as the day goes on, there's less traders trading because people, if you make money, you kind of take off. So there's more volatility and areas don't seem to hold on as well, especially price action areas. So there's price action areas and then there's levels that we gave out. So that it's a combination of both that we incorporate into our trading methodology. But MACDs, as far as your question is concerned, they're just there. I don't know if they're going to give you a good entry point to maximize profits. That's all I'm trying to say. Yeah, the Bollinger Band is about the only indicator that I would have as far as, and we've put together the Bollinger Band to give us some good reasons. It works well in some situations with the work that we do. So if we were looking at anything, I would say the Bollinger Band gives us a good indication of maybe staying on the right side of the market. Again, there's reasons when we use it and reasons when we don't. So, but that would be about it. As you can see, we don't use any other indicators here whatsoever. So. All right, we are standing here on the middle of this range that they extended here a little bit, but seem to be coming back into this range a little bit. Can the moving average and Bollinger Band again work for also data as well? I mean, yeah, yeah. Bollinger Bands, like I said, we use the Bollinger Bands well, the Bollinger, the main Bollinger Band, not the red, our, and as far as we're concerned, the blue band. We use that to help us. Not so much so the other two, whatever those outside indicators are. I have no idea what they ever used them for, and no clue what they're even there for. But anyway, so as far as the Bollinger Band, now there's a couple moving averages depending on, what the market is and how. We've also incorporated some moving averages into the work that we do, but moving averages do work a little bit. I mean, to some extent. Again, we're scalping, so it's a matter of how you use that moving average, right? We're not using it for a long-term big move. We're trying to use the moving average to help us maybe with a rotation to give us a scalping opportunity, right? So again, it's a different methodology. We're not trying to find direction in the market. We're just trying to find areas to trade, to scalp the market, to find those inflection points that give us an opportunity to scalp. So it's a different concept. I know some people don't like that. Some people would rather, get a position on and kind of sit with it all day, position trade. Whether they could be right or wrong, I don't know. I mean, what is your puking point when you're wrong? 10 points, 20 points, 30 points? I don't know. Again, everybody has different areas that they puke, but we're keeping it a little bit tighter, and we're looking for. I mean, we trade 2 or 3 points, but not necessarily have to trade. You could trade 5 points, 6 points. Again, everybody has different ways of trading, and not one way is right, not one way is wrong. Our methodologies focus more on scalping opportunities versus. And finding those areas that we believe the market will give us those scalping opportunities. So I'm not saying that moving averages don't work, or getting above a moving average is a bullish indicator, or below is a bearish indicator. That again, we're just using those averages to kind of give us areas to scalp. So I hope that makes sense. Again, when you say which way it can go as far as the position is concerned, we're looking for technical analysis to give us those opportunities, previous support levels, previous resistance areas that the market indicates are going to give us those opportunities. We're not trying to guess where those reasons are, so we're looking at technical analysis to give us those areas that will give us those opportunities for the market for us to scalp those markets. So sometimes they do work, sometimes they don't, but obviously the work that we do, most of the things that we're looking at seem to give us those opportunities to scalp based on the technical analysis that we do. So all those things that you said, patterns, reversals, and they're all there. It's just a matter of letting the market set it up for us. If when the market sets up a situation or through price action, then we'll make a decision as to whether we want to go long or short against an area, or where that support is, or where that resistance is. Right now we're range bound, so we're the market's really not giving us too much. I would say right now resistance would be around the 77 area. If we get above 80, it would seem like the market might want to go back up and go retest our pivot, or even our levels above that. But we'll see. For the time being, the market's under a little bit of pressure and kind of staying that way. But if you're position trading and you're looking for where you don't want to be short anymore, probably if we get above 80 for the time being, but that could change. Yeah, well, that's what we do in our education course. We actually work with everybody to show you where those levels are, why they would work, and how we incorporate not only the 5 minute, but how to incorporate it hourly, weekly, and monthly into the work that we do. So the goal here is to find those areas and to show you why they would work, and then for you to be able to find those areas and do the same work that we do, independent of myself. Again, that's is it possible to trade all this information through your phone? Anything's possible these days, right? It all depends on how you manage that information individually. I don't know what capabilities your phone has to be able to get that information, looking at charts or whatever, but I guess it's possible. You know, I wouldn't put it. I mean, these days anything's possible with your phones. Again, we're a little range bound right now, kind of staying in this little range that we talked about. We got down to 62 and a half there and then popped back up. I don't, well, I used to have used to have CNBC up on my office, and then I started this trading room because I couldn't handle listening to those people talk all day long. And you can get one opinion, you can get another opinion. I just kind of, again, just like the way I trade, I kind of look at the market to kind of give us an indication of what's happening. And we're not smart enough to understand when these markets are going to deviate or change their direction. We just trade what the price action is on any given day and go with that. I've stopped trying to figure out direction in the market ever since, for a long time now, because it just isn't not too profitable if I come in with some kind of opinion on direction and kind of go with it. If you look at yesterday, if your direction yesterday was was the market was supposed to go down. It totally reverted and switched and went up. So you would think that today we would follow through, and then overnight they kept slipping and selling it off, and now we're going back down. So I don't know, was I going to be bullish yesterday and bearish today, or was I bearish yesterday and then bullish today? I don't know. So I'm not trying to get direction. I'm just taking each day as it comes, and then as long as you stay in the game long enough, it doesn't matter which direction the markets are going. All you're trying to do is try to take advantage of opportunities on your trades that present themselves every day. So you just want opportunities to trade. You're not looking for direction. All right, range bound still. Again, if you're trading the range, you're doing okay. Obviously, a little risky, but it is working out, and that could happens when the market kind of loses some of its energy. Right? We are down a lot, but doesn't mean it can't keep going down, especially after the face of the FOMC meeting. They're very concerned about what they're going to do tomorrow. I think it's pretty much baked in what they're going to do tomorrow, especially the bond market is telling you that. They got a 129 handle here. The question isn't going to be whether they raise 75 basis points this time, was what they're going to do next time and how their statement is going to sound when they release the decision.